but he thinks after this wave 5, yes, we're going to have a wave, long-term wave 4 correction, and then it's going to go hyperbolic. and I think that's when we get the hyperinflation. That's what he's looking for as well. It's interesting times. You need to hold on to your gold and silver for dear life, as I've always said. Friday, November 14th, 2025, Monaco 64, home of alternative economics and contrarian views. Today we're going to look at what the Gnome of Zürich has been telling me, and he thinks it's an important observation about the gold and silver market. He thinks the market's getting faster. Yes, the volatility is a symptom of that. And he thinks this quickness in market movements in gold and silver portends a massive explosion in the price of gold and silver. And we're going to look at that. Of course, he follows Elliott wave analysis of markets, and he goes back a very, very long time. He doesn't go back 10, 15, 20 years. He goes back like 200 years, and he thinks it's really important that you do that, so you know in what Elliott wave structure you are longer term. That could affect that, and how commodities as well, or precious metals, are different from the stock market. We're going to look at that, and before we do, just wanted to let you know that the merchandise store, we have a new link to it. Even though the old link still works, it will take you to the new page, the Rudy collection. And Karen, she's designed a new mug, Gnome of Zürich mug. She watches the channel, so she knows what we're doing. Really interesting. A mug there from the Gnome of Zürich. It says "Keeper of Sound Money," the Gnome of Zürich, and there's a t-shirt as well for that. And the other thing she asked me to tell you is that there's a 10% discount from now until the 15th of December for Thanksgiving and Christmas. So yeah, check out the merchandise store. I'm going to put the new link below in the description. Before we move on to what the Gnome of Zürich has been telling me, just want to look at what's going on in the UK, because it's got a lot to do, I think, with precious metals, with what's going on in the markets, the stock market, the melt up that we're continuing to see, even though we saw the market come off yesterday, the general stock markets. But there's a story out overnight about this budget that everyone's been talking for months. I think that's one of the problems with this budget. They should have done it back in October or beginning of November, when they're usually supposed to do it. But anyway, it's big news because Starmer and Reeves, so the Prime Minister and the Chancellor of the Exchequer, or the Minister of Finance, they've decided to ditch the plan to increase income tax rates in the budget. So, they're going to try to find an alternative. One of them is just to lower the thresholds at which you pay income tax, which has been frozen. These thresholds have been frozen for years. The Tories, the previous Conservative government, they froze it. And of course, inflation makes sure that a lot of people are paying more tax because those thresholds don't keep up with inflation. Now she's talking about like cutting it. It's akin to raising rates, but it's done in a politically expedient way, so she can say, I didn't raise the income tax. For now, though, I'll let you know what these thresholds are. So up to £12,570 a year, you pay zero income tax. The basic rate of 20% is paid from 2,571 to 50,270, you pay 20%. So I think what could happen, she could lower that 12,571 to 10. So yeah, so you'd be paying 20%. Yeah, start paying 20% on a lower threshold. The higher rate of 40%, that starts at 50,271. Well, she could lower that as well to, let's say, 45,000, and you only pay 20,000 to 45,000, and then you start paying 40%. Anything over 45. There's an additional even higher rate, which is 45%, and you pay that anything over 125,140. She could lower that to 100,000. Who knows? The other thing that this shows is that the backbenchers, the major part of the Labour Party that is in Parliament, they're very lefty. They want more spending. They want a bigger public sector. And I think that's why they've backed down on this income tax raise. And they're going for an alternative. The other thing they've done is that they've taken a cap for the child benefit payments from 2 children. So let's say a family that's on benefits, and there are many of them here, that have 6 kids. Well, now all kids are going to get that. I think it's 290 pounds of benefits. So you can see how that's going to add to the bill, and you can see how that's going to encourage some kind of behavior, if you know what I mean. The other thing that we're seeing is that a lot of people are not well, especially young people, from that crisis we had some years ago, where people were given all kinds of medications. I'm not going to really dwell too much into that, but suffice it to say, people on universal credit or benefits have increased by 1 million in the last year. So yeah, this is not going to get better. They're going to keep inflating the currency. They're not going to allow things to go into depression. Yes, we could have a scare in the stock market, yeah, we could see a big correction, not just in the US, but here in the UK. But I suspect the central bankers and the governments are not going to let that stand for too long. They're going to come in with stimulus. That's all they know how to do. And that's why I think we are in this crack-up boom or hyperinflationary environment. So yeah, the Gnome of Zürich thinks the same, even though he's expecting a big crash in the stock market. But that could be what triggers as well more stimulus, right? And in terms of gold, the reason why and silver, he's so bullish is that he's looked at the very long term. He's looking at gold, for example, here in this chart, this Elliott wave chart. It goes back to 1720 to the present day. Well, it's 2024. It's pretty good. It doesn't need, it needs to be updated, but it looks very similar to now. But his very long wave count is wave 1 here, which is Black Friday 1869, when they tried to corner the gold market. I think it was gold and someone else, I forgot. But look it up, Black Friday 1869. And then the longer count, wave 2, is the 1933, 34 event when Roosevelt revalued gold and devalued the dollar. And since then, we've been on long-term wave 3. We're still in that. So it's very long term. But from 1932, there's another wave count, 1, which is 33 to 34, when gold went from $20.67 to 35. Then you've got wave 2. I think it's 1968. That's when gold started floating when they lost control of the London gold pool. And then wave 3 was, the bull market in the 70s, where we went from 35 to 887.50. Wave 4 was the 20-year correction that we had in gold, or a bear market, from 1980 to, he says it's 1999. Some people say 2000, 2001. So now we are in wave 5. And wave 5s, according to him, and I have bought an Elliott Wave book that he told me to buy, and I'm still reading about it. But wave 5 in commodities, or commodity money, precious metals, is different than in the stock market. Wave 5s are faster, stronger, and bigger than wave 3s. You can see wave 3 was quite a big wave from 1970 to 1980, or 1968 to 1980, 12 years. So, wave 5, huge, could be huge. Plus, we're also in a long-term wave 3, and which for him tells him that this bull market is not going to be over after wave 5, which he thinks is going to be explosive, not just for gold, but for silver. And he thinks we are very near the end of wave 5. It could be a matter of months. It might even be before the end of the year, but he's looking more somewhere around end of January, February. It's very difficult to get the timing on this, but he thinks after this wave 5, yes, we're going to have a long-term wave 4 correction, and then it's going to go hyperbolic. and I think that's when we get the hyperinflation. That's what he's looking for as well. It's interesting times. You need to hold on to your gold and silver for dear life, as I've always said, your physical gold and silver for dear life. And ETFs, unallocated gold, even allocated gold with banks, I wouldn't trust any of that. The only way I trust gold, especially in this monetary chaos environment, monetary mayhem environment, is physical. Physical possession in a private vault with an institution that you trust, with a bullion dealer that you trust. Some of you might want to hide it as well. And that's another story. But you could also use Dirty Man Safe, one of our affiliates. They provide, I think, good safety for storing some of your precious metals somewhere safe. Dirty Man Safe. There's a link below in the description. If you use that link, it's my landing page. You get 10% off from those safes. But back to the markets. I've shown you this chart many times. Maybe not for the brand new subscribers or brand new viewers that are watching the channel now, but it's the comparison of the value of one gold mark and paper marks back in the early 1920s, in the aftermath of World War I, and the price of gold since, let's say, the beginning of this century. Yes, the time frame is different, but the shape, the wave looks very similar, and that's called fractals. Basically, when you are at the seaside, let's say you see some big waves out there where people are surfing, but when you get closer to the shore, you get little waves, and they're very similar to the bigger waves. They're just like the amplitude or the how long they are or how big they are is different from the bigger waves, but they're similar in form. And this is what I've been warning about. Well, I think since we broke out of this cup and handle that was formed from the high in 2011 and the high in 2020, because it looks very similar to the cup and handle that was formed back in the day during the Weimar Republic. And you can see that we're following exactly same path, which is really, really disturbing. Disturbing because it shows that they're going to drive our fiat currencies to the ground. And that's why you need to have anything but the fiat currency. Of course, right now, you still need it to function. I'm not saying you get rid of all of it, but you make sure you have some hard assets, be it gold, silver, or anything of value, let's say land, agricultural land, or things that people will need once the currencies collapse, because that's what hyperinflation is. It's not cost push inflation. It's when people finally lose faith and confidence in the issuer of the currency. And let me ask you, in the US, in the UK, in Canada, in Australia, and those countries are where people watch me the most, do you really have faith in your politicians, the people that are running your countries right now? Well, that's for you to answer in the comment section, but I don't, and I'm not surprised. I've spoken about the symptoms that we'd have during a hyperinflation and the stuff that happened in Germany. It's all happening now. It's really disturbing. We have the political mayhem, geopolitical mayhem. We have loads of debt. We got political uncertainty, assassination attempts, everything. Everything is repeating, kind of, not exactly, of course, but rhyming. I recommend the Death of Money, or When Money Dies by Adam Ferguson. That's a good book about what happened in Germany in the early 20s. So you can see how the monthly chart that I put here for present day gold price in the US looks pretty straight. We can't even see the correction that we had from mid-October onwards. And I suspect the same thing happened in Germany. There, it was very choppy on a day-to-day, week-to-week basis. But in the long term, there's only one way for the Reichsmark, and that was total destruction. Is it going to happen now to our currencies, dollar, pounds, euros, Swiss francs included? I think it will, because I don't see these people stopping the inflating. It might take a while for them to respond in the next crisis, and the next crisis could be quite close. But I don't think it's like 5 years away. It's more like months, or maybe 12, 18 months away. It could even be weeks. So the other chart I want to show is the British pound versus the Swiss franc, and it shows how the pound has been in decline since the end of empire, I guess, because you could fetch, I think it was 25 francs, or 20 francs with a pound back in the 19th century and the early part of the 20th century. But look at it now. So yeah, now we're almost 1-to-1. I think we're 107. So is having some Swiss francs a good hedge against pound weakness? Yes, in the fiat currency world it is, but the ultimate hedge would be gold, of course, and silver. And for the UK, coins of the realm are the best way. It's the best way to protect yourself in that instance. So it's just gone past 8 o'clock. I'm earlier today as well because I need to go out, and that's why I wasn't able to do the live, not the live stream, but my usual chat with Clive. He's going to be on Sunday for the live stream. But I wanted to look how the gilt market reacted to this comment that they're going to backtrack on raising income tax, and gilt market opens just after 8. So right now the 10-year yield is up 10 basis points. So I think investors are concerned now that they're going to cave in and they're going to borrow and inflate instead of taxing. But the inflation is going to be even worse. That's what the bond market is telling us. We got the 30-year gilt yield. That's up almost 13 basis points at 540. So look out for the bond market. I've noticed as well that the U.S. Treasury market yields have been creeping up. We were below 4% a week or two ago in the 10-year, and now we're approaching 4.15. So that's another thing to keep an eye on. Not that we don't have a lot of other things to keep an eye on. And our favorite metals, of course, they're up a little bit this morning. Spot gold is at 41.76. It has been as high as 42.11. Silver has been as high as 53.50. Right now it's up 50 cents at 52.80. So yeah, just sit tight, hold on to your hats, and hang on to your gold and silver for dear life. And with that, I'm going to wish you all a great weekend. Take care. Bye.